Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, first day of April 2019, and this is the daily report for gold and silver. We had all of the precious metals with the exception of palladium moving lower on the day. All of that in response to a very, very strong U.S. equities market and risk on market sentiment. Dow Jones Industrial Average actually closed up over 300 points on the day. Net effect to gold. Gold closed down about $6.20. June is now the most active, which is at $12.9230. Silver also lower on the day, down about 3.5 cents at $15.07.5. And platinum, is a little bit higher now, up about 70 cents on the day at $854.80. But it's palladium that continues to rock the precious metals world. $1390.80, up almost $50 on the day, a $49 move. And we'll talk about that in detail as we pull up our technical studies. Lastly, I do want to take a look at the dollar because you can see that the dollar had really very little, if any, influence on the precious metals. It was specifically the U.S. equities, and you can see that here with the Dow Jones Industrial Average closing up 329 points on the day. Traders, no doubt, we did see a softening in gold and silver pricing today. Platinum basically closed unchanged, and we had a huge upsurge in palladium. But I want to talk about two metals that specifically had very similar patterns occur on Friday and yet dramatically different results. And the markets I'm talking about are gold and palladium. And the pattern that I'm talking about is simply called a bullish harami. Now, a bullish harami, I'm going to circle a larger portion of it, has a couple of things to define it. The first necessary component is a bullish harami occurs after a defined downtrend. Although it's short, we can definitely say that we got that. The second criteria is that the red line has got to be a pretty sizable sell-off or a large red line. And then what you get is on the following day, you get a green candle that has a very small body close to the center. Harami simply means pregnant in Japanese, and that is an indication of a reversal pattern, a key reversal pattern. However, to take that pattern, the following day has to contain a candle with a higher high and a higher low, of which when we look at gold, neither of those criteria were met. The only thing that we can really say when we look at today's activity is when we look at the low came in at around 1292.30. The actual low was 1291 even. So just a little bit below, but what it tells me is that there is potentially some fairly solid support at this particular price point. However, at the same time, we see real resistance at that next level, the 0.23% retracement level, which occurs roughly at 1312. Remember, now June is the most active contract month. But take a look at palladium because we had that same pattern occur with a completely different result. And traders, we've just gone ahead and pulled up a daily palladium chart, and it's easy to discern that we also got a bullish harami pattern. The first thing in terms of criteria, it occurs after a defined downtrend. We definitely see that happening. The second thing is that the red candle has to be a long red candle. This is a $100 drop. That occurred on Thursday. And then on Friday, you get a small bodied candle inside the trading range of the prior day. Now, for a more pure harami, you would want this body to be maybe a little bit smaller and more towards the midpoint. However, you can call this a harami or an incomplete or a variation off of a piercing line. A piercing line would have had to open below the closing price on Thursday and then close at or above the midpoint. Now, here's the key distinction. As we did not get in gold, the following day, meaning today, we definitely got a higher high, we definitely got a higher low, and we also got a large green candle. And that, traders, is truly the definition of a bullish harami confirmation. That would actually trigger a buy signal in palladium, and for those trading palladium, we can recommend that you initiate long positions. In terms of a stop placement, you would want to place it at just below the 100-day moving average, which is at 1306. So you would place it either below 1300 because there is about a $10 bid-ask spread in this market. It's rather large. So I'd place it at 1298, 1299 in that area. But the key of this discussion today was to show you how this particular key reversal pattern looks when it actually has a follow-through and really tells you that you've seen a key reversal. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.